So, Chris, what does the smartest investor on the planet spend his days and nights doing in addition to reading 400 to 500 books a year? Munger was obsessed with messing up. He was obsessed with not repeating other people's and his own mistakes. He stood up before 40,000 devotees at the Berkshire Hathaway annual meeting and said, "We were horses' asses. We failed you. And we don't want to repeat that mistake." He was obsessed with not messing up. And he said, if you just focus on not messing up, you'll do well. And of course, Chris, I hate to say this on your show because people aren't going to believe it, but if Berkshire Hathaway lost 99% of its value, if it went from 100 to 1, it would still wallop the S&P 500 over the last 60 years. So obviously, Warren and Charlie are worth listening to. And what that gave me over time, as I traded FOMO for FOMO, I got JOMO. What's JOMO? That is the joy of missing out. I just this morning wrote a blog post on an asset that we were the largest investor in, that we had a chance to invest way more in about 3 years ago, and we didn't. And it was a home run, and I wish we had. But I also had the joy of knowing that we did not over concentrate, because that deal could have gone south. And so you get the joy of missing out. It's painful joy. You know what? I did the right thing at the time.
Yeah. A question for you is, okay, the Fed just announced interest rates unchanged. It's March 19th. And what my question for you is, because I talked to a lot of real estate investors, and number one thing is interest rates. But then you have also the strong dollar, you have tariffs, and then you also have inflation. And how does all of this impact the real estate market, and how should people be thinking about this and positioning themselves?
Great question, Chris. This is another one I hate to say because people aren't going to believe it, but you can go check it out. Warren and Charlie said that in 55, 60 years of investing together, they never had a significant conversation about the economy in their decision-making process. They said they never included the economy in the equation. They were durable asset type, durable asset, great management teams, and they did not care what the economy, what interest rates, all those things were doing, because those were outside their control.